Okay, good morning everyone, and thanks for joining us. I'd like to start off by welcoming all of you to the OptionsCity MGEX webinar on capturing electronic trades on MGEX with OptionsCity Metro. My name is Matt Licata, and I'm in business development here at OptionsCity. Presenting with me today will be Joe Victor from the MGEX. We hope to provide you with a better understanding of the MGEX exchange, particularly its electronic trading opportunities, and how using OptionsCity Metro can give you an edge on new trading opportunities through an increasing volume in the electronic volumes. Feel free to submit any questions you have during the presentation, and at the end we'll be doing a short Q&A session. If we don't get to your question, we will be sure to follow up after the webinar. So, without further ado, I want to introduce Joe Victor from the MGEX. Joe?
Thank you, Matt. And Joe Victor with the Minneapolis Exchange, and of course, business development specialist. And the first slide you're going to see is the Minneapolis Grain Exchange. 130 years of providing risk management products and services to the derivatives industry. I'm not going to read everything to you because you can read yourselves, and we are an exclusive market for hard red spring wheat. It is a high-protein wheat, not only for futures and options, but also have index products on many of the wheats. It's the hard red winter wheat, soft red winter wheat, the index product, of course, hard red spring wheat, and of course, National Corn Index and Soybean Index. That's futures minus a basis. National basis gets you an index. Of course, we trade all contracts on the CME Globex. And of course, in the next slide, the first slide you're going to see is demographics. Look in the upper left-hand corner, and that's winter wheat. And look at the geographic region of the winter wheat contracts. And of course, that extends from Colorado all the way to North Carolina, Virginia. And of course, you're looking at not only hard red winter wheat, but you're looking at soft red winter wheat. And of course, it even extends up there into North Dakota. Now in the lower right-hand corner, you're going to see geographic, and God forbid if we have a problem with any kind of weather-related problems in a 4-statewide region, double digits, of course, for Minnesota, North Dakota at 44%, small geographic area, South Dakota at 11%, of course, Montana at 14%. So the first point that I'm making is, if you're looking for volatility, it's here. It's in spring wheat country. It's a high-protein wheat, so it's got two things going against it. Number one, if you have any kind of weather-related problems. Number two, it is a high-protein wheat. It's hard rolls. It's the baking products, breads. It is not a snack food type wheat that we see down there east of Mississippi in winter wheat country. Next slide you're going to see is, of course, the hard red spring wheat end stocks to use. Presently, we're at 38.5% end stocks to use. The 13-year average is 34.1%. And again, if you're looking for volatility, here it is, because I posted a linear trend line on this, and of course, a downward sloping. And what it's telling me is over time, we may have high stocks now, but that's no guarantee. The overall magnitude of this product is one of which has a lot of volatility on a downward sloping trend line for a long-term period of time. And of course, in the next slide, you'll see Durham end stocks to use. And Durham, we hedge using the hard red spring wheat futures and options. And of course, Durham end stocks to use, presently we're at 36.8%. That's primarily pasta that you're looking at. And again, God forbid if we have a problem, 64, 65% of the Durham that's raised is in one state, North Dakota. If we have a problem there, you're looking at present end stocks to use at 36.8%. The 13-year average is 26.3%. But again, I look at the long-term linear trend line as telling us we're in a downward sloping type atmosphere. And again, volatility is here in the hard red spring wheat futures. And of course, in the next slide, what you're going to see is a combination of winter wheat. There is some protein for hard red winter wheat, and stocks to use 11.5 to 12% protein. Snack food type wheat for soft red winter wheat, and you're looking at present end stocks used for soft red winter wheat at 49.9%, almost half, almost 50%. The 13-year average at 27.3%. Of course, you look at a long-term linear trend line, we are sloping higher. So what it tells me is it's not a very volatile market. It is something that when I look at soft red winter wheat, snack food type wheat, you're looking at something that doesn't have a great deal of volatility to it. And of course, when you look at the hard red winter wheat, the end stocks use at 28.3%, the 13-year average at 31.8%. And again, when I look at the long-term average, the linear trend line continues to show there is some volatility, is a downward sloping type atmosphere. It is something that needs to have some respect to it. And of course, in the next slide, what you're going to see is a 5-year average production and the amount of bushels. And what I look at is, again, look at the geographics, look at the demographics, look at the volatility that we have for hard red spring wheat, and of course, versus that of the snack food type wheat. What do we produce the most of? It is hard red winter wheat, primarily Kansas, Oklahoma, Texas, Colorado, and you're a little over 1 billion bushels per year on a 5-year average. What is the second most wheat raised here in the United States? And it is hard red spring wheat. We're about a little bit more than 595 million bushels. There is a reason why this high-protein wheat is raised, and again, primarily double-digit states, a 4-statewide region, and of course, the least amount is in the soft red winter wheat at 461 million bushel. The next slide, what you're going to see is the spread that I've been following for months, and that is look at the Minneapolis May contract versus the Chicago May contract, and that's a futures chart. And if you want to look at it in a cents per bushel in that slide, you're going to see that $1.59 per bushel or 159 cents, whatever you want to look at. But again, I look at things from a fundamental standpoint as well as the technical. The technicals tell me that, shortly after the harvest, you picked up almost $1, now 20 cents off that, figure at least $1.39 and a half you picked up per bushel. And again, that's high protein spring wheat versus snack food type wheat. And of course, have to give a respect for Kansas City wheat. There is some protein in there. And again, that's what not only domestically, but in that next slide, you're going to see the May contract versus the Chicago contract. And of course, what you see is primarily good protein, decent amount of protein, and that's what the domestic and the world is looking for right now. And that's not only calories in the form of wheat, but also looking for protein and baking products. And of course, when you look at Kansas City versus Chicago, you picked up about $1.29 or 129 cents. So again, the point that I'm making is if you're looking for volatility, it's here in spring wheat country. It's a smaller geographic region. It is high protein wheat. It is a baking type wheat. And of course, like I said from the get-go, God forbid if we have a weather problem when it comes to North Dakota, South Dakota, Minnesota, and Montana. With that, I'd like to turn it over to Matt and the OptionsCity Metro.
Great. Thank you very much, Joe. I appreciate it. And again, thanks everyone for joining us today. What I want to do is give you just a basic introduction into OptionsCity Metro and how using our system can make you a more profitable trader, specifically with the increasing volatility Joe was mentioning at the MGEX with the hard red spring wheat. So as a quick overview, OptionsCity was founded in 2006, and we're headquartered here in Chicago. We provide real-time electronic trading platform for professional options traders, and we're a multi-asset class platform, and we're built for speed and flexibility. We think of ourselves as an end-to-end option trading solution, and by that I mean, and where this kind of sets us apart from some of the other vendors in the market, is that a lot of traders are using multiple systems for things like pricing, execution, and risk management. With the OptionsCity Metro product, it allows you to manage all of these components of trading under a single platform. And in addition, we are certified at most major U.S. exchanges. So why use OptionsCity Metro? We consider ourselves next generation technology. Like I said, we've been around for about 4 years. Where a lot of other vendors are built on legacy systems, OptionsCity was built from the ground up specifically for scalability, speed, and ease of use. As mentioned before, we're an end-to-end trading solution giving traders the ability to set and manage their prices, execute trades, and manage risk under the single platform instead of multiple moving parts. And this is very advantageous for guys trading in groups because it makes the overall position keeping and just workflow much easier to manage and monitor. OptionsCity Metro is a server-based application allowing traders to get in and out of positions with as much speed as possible. And I'll get into that in just a moment. And lastly, the system provides the ability to use electronic eye to scan the market for specific opportunities based on preset conditions that you can configure. And it also allows you to disseminate mass quotes across multiple months, products, and strikes for any of the market makers that are out there. So as I mentioned, we're a server-based technology. So what is server-based architecture mean? We co-locate our servers in Chicago next to the trade matching engine. The reason we do this is that all the automated processing and heavy lifting in the application, especially around things like mass quoting and electronic eye and auto hedging, is done on the server level for the lowest latency and speed possible. With our city front end on the left, users can really be located anywhere. You could have a trader in the office, a trader in the pit, or someone trading from Hawaii if you wanted. And they're all accessing the application on the server in the same manner. So trading strategies. One of the things that really does set OptionsCity apart from other systems is it's an electronic trading system, but it caters to both the screen traders and the floor traders working both independently or collaboratively. So for floor traders, they can take advantage of electronic trades in the ring through our tablet technology. They can also electronically trade other products that aren't in that specific pit that they're trading in at that moment. There are similar attributes for off-floor traders in that they can quote, create electronic eye missions for opportunities, and update their SKUs and models and work in tandem with people in their group, whether it's other screen traders or traders in the pits on tablets. So moving on, here we can see the models and SKU widget. Part of Metro being an end-to-end solution is the ability to create your own models and SKUs. We have an input section here on the left that allows you to manually enter and adjust your SKU parameters across a large range of months for that particular product. We can also graphically represent and adjust the SKU with various control points, and you can also pull in live bids and offers and apply the implied to compare your SKU to the electronic marketplace to see what opportunities might be bid or offered through our values. And this is done down here. There's also the ability to view hot zones, which makes it, again, graphically easier to look at, and that's represented in that pink stripe up above in the graphical view. And then lastly, in the models and SKUs, we have an output section, which is, again, basically our theoretical values that we're creating, and it allows ease of exportation to, like, Excel for further analysis.